Hello, 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 everyone. Happy Tuesdays, guys. Happy Tuesday, man. If you're on this call, please drop a one in the chat if you can hear me clearly. If you can hear me clearly, please drop a one in the chat. Super excited today, guys, man. Welcome to Digital Goats Academy. I'm your host, Antoine Boatwright, aka the Digital Goat or the Digital Goat, guys, man. Just super excited to be sharing this information with you guys today, man. And our topic today is going to be market psychology. I know a lot of people have been struggling with that, and we're not going to go as in depth as we are going to go into like as the year progresses, but we're just going to talk about the psychology when it comes to the market. And I'm going to use the charts to kind of illustrate that. So if you guys find value in my channel, please drop that like, guys, and subscribe, please, if you guys find value within my content, man. And let's just get this thing started. So I'm going to start off with the dollar like I normally do, guys. It just puts me at peace to start off with the dollar index. So that's what we're currently on. Let me get this out of the way of you guys, man. And that's what we're going to talk about: market psychology, how that plays into the market, and how you're going to be able to utilize that, how you're going to be able to utilize that information to make better decisions within the market, guys. So yeah, let's just get into it, man. So I know one of the people within my group, within my community, they were struggling with stuff like entries, or how do I analyze the market as far as like entries and exits? When do I know to get out? You know, things like that, guys. How do I know that the market is in an uptrend? Well, first thing we want to do is we want to have a clear conscience when we go into the market, guys. No matter what pair you're jumping into, you want to have a clear conscience, or like not be up under any stress, or not have any distractions going on that's going to stop you or prevent you from pretty much navigating through the market properly and making profit. Understand, the biggest thing that people need to know is that you're going to lose in this market, guys. You are going to lose in this market. So if your psychology is that I'm trying to win all the time, you're playing yourself right then and there, guys, because there's no way to win 100%. You can have good percentages, guys. You can have good percentages, or you can lose more and still be profitable within this market. Probably that's actually more so of the traders, that their win percentage isn't great, but because of how their risk management is, they're able to navigate. I mean, they're able to make the profit that they need through the market and go throughout their day, guys. Well, let's look at something live now. With the dollar, I am looking for it to be bullish after it decides to like pull back. I know there was like a gap somewhere, but I don't want to really like go into like the dollar index that much. I was just starting off with that, guys, because that's where my screen was at. Let's look at something that I'm actually looking at live to see what do I need to do within this market in order to make a conscious issue, or a better decision when I'm looking to enter in the market. The first thing, guys, I would say, me personally, is like, how's your risk management? You know what I'm saying? So what your account size is. What is your account size currently? So is it $200? Is it $1,000? Is it 50? Now you got to go into a percentage based off of that. Now understand, you want to play it safe as a trader, but we already are over leveraging. If you don't have like excuse me, if you don't have like $100,000 within this account, hold on, guys, where is my tea? Hold on real quick. Had to get my tea, guys. My bad. So, what was I saying? I literally forgot what I was saying. Okay. Oh, yeah. About your account size, right? Depending on your account size, obviously you want to start with percentages, guys. I know I'm spelling that wrong. There we go. Percentages, right? I don't want to make it all big and stuff. Percentages. I guess we can make that bigger, right? So we need to start off with percentages in the market. So if you're at like $100, right? Let's just start with $100, because most people don't have $100,000 to put up in this market. You need to be trying to earn anywhere from 3 to 4%. That means the opposite needs to happen. That means I can't lose no more than 3 to 4%. Now, let's be honest, guys, 3% out of 100, that's $3. Nobody's really trying to, nobody's really trying to necessarily give that money up or have such a small window as far as like the risk to reward ratio, but you got to play that game, guys. So 3%, let's just use that number to kind of start things off, and then we'll work our way up based off of, like the account size, right? So let's just have a rule of thumb of 3. Why are you not working with me? 3%. So we're not making it like, algebra or anything. Where's the division symbol? There we go. So $100 divided by 3% is what? $3, right? So if I have $100, that means that the minute that I see $3, I pretty much violated like my rule, right? Now let's be honest, guys. Who's not going to stay in the market over $3? Now that is 30 pips. Understand now what we're going to add into is how to factor in the pips, because it does make sense, guys, depending on how you're trading. So if you had $100 and 3% of your account, that's at a 0.01, that's 30 pips gone. Understand that's important, guys. 30 pips, right? 30 pips to equal that $3, right? If I was trading at a 0.01. I've already violated my percentage, right? Now, that's cool. It just depends. That's why we say anywhere from 3 to 4%. I mean, you can push it as high as you would like based off of like a 0.01. So if I'm doing like a 0.02, the market goes 30 pips against me. That's $6, right? If you do the math, that's 60 pips. All right? That's 60 pips right there. Why am I saying that? The reason why I'm saying that, guys, is because we need to understand that the market travels 25 to 30% before it starts making moves. It travels 25 to 30% before continuation, right? So anytime the market moves 25 pips, 30 pips, that's your range for the market retesting, pulling back, whatever you want to say. Pulling back, right? That's the range for the market retesting or pulling back, knowing that the market moves 25 to 30 pips. So based off that 3% range or 4%, whatever the number you're going to be at, off that $100 account, that means I can only risk 30 to 25 pips. You see what I'm saying, guys? Now, the gains are going to be infinite. When you're in profit, obviously you can let it go as high or low as the market is going to go, but we need to understand that a percentage that we are risking. So let's do this with an $1,000 account, right? Because what I want you guys to understand is that no matter what, when we're leveraging in this market, we're already over leveraging if we don't have $100,000 in the account. But there are still ways to leverage, to over leverage and still leverage within this market. And it comes down to your risk to reward ratio, and it comes down to how you're moving with your stop loss, right? So my rule of thumb is that I don't even go beyond 30 pips, right? I don't even go beyond 30 pips. So if I'm entering in the market, now let's do this based off of if we were entering GU, right? Let me clean all this up. If we were entering GU so you guys can understand, right? Now, what's going to play the factor into the psychology of this is that what time frame are we in, right? What market session are we currently in? That's something that a lot of people don't do, right? You got to have like a checklist when you're going into the market, guys. You got to say, okay, what session am I in? What am I trying to trade? And is there news coming out in this market? Well, let's go and see if there's any news affecting the British pound or euro. Well, what are we looking at? British pound? Yeah. Let's see if there's any news affecting the British pound. I'm already on my my FX book. If you guys want to use investing.com or Forex Factory, use whatever you need for news outlets, because it's not about reading the news. It's about seeing that, man, there's a bunch of news coming out. So I have to be cautious within the market, right? I probably should be writing these in order, but we'll figure out an order for it, guys. I'll probably actually drop it in the description below on like what my order is when I'm doing my checklist. So is there any news coming out based on this time frame, right, that I'm in? Now, is this a good time frame based off of that currency pair that we're looking at, GBP, British pound against the United States dollar? Is this a good time frame to enter? No. Can you still trade this currency pair while the market is not at those market sessions, right? Yes, you absolutely can. Will you have momentum? No, you'll have low volume, but that means that that currency pair is open to any type of volatility that news may bring out. Now, we don't have any news for the British pound until 2 a.m. in the morning, right? Until 2 a.m. in the morning, we got an inflation rate. It's medium news, so it is going to have an impact. But the only current news that we have that could be, maybe affecting the British pound is the Japanese yen. And the only reason I say that is because once this news comes out in 45 minutes and then the next 2 hours, it's going to impact like GBP, JPY. That's the reason why I know it's going to impact both of these currencies, but not so much, GU. It could just force it into the direction that the market is going to pretty much intend to go. But is there news going on? We're saying no. This isn't a good market session, but we're just hypothetically talking, guys. This isn't a good market session for GBP USD, but you can still trade this. And if I was trading it, is there any news that could just affect me and throw my bias off? No. Is it after 8 o'clock? Yes. And the reason why I say after 8 o'clock, guys, is because the dollar index, it doesn't open back up until like 7:45 or closer to 8. So anything after 8 will put you at better true direction within the market based off of price action. I'm not saying that, okay, just because you found a position on GBP USD to go, I don't know, up, that doesn't mean that currently it's ready to go up. Based off of price action, it could be coming down, and then as we head into the London session, make its way up. You know what I'm saying? Just key things to know about. So, okay, if we're looking to enter this, now we know that this is not the right market session, but let's pretend that this is the right market session. We're heading closer to news, right? One, we definitely don't want to enter in the opening bell. We don't want to enter, not the opening bell. We don't want to enter pre-London, and we don't want to enter at the open of London, guys. So you need to keep that in mind, right? So check in that. Now, where am I at? Now, the psychology of the technicals is like, where am I at in the market, right? Am I at a level of structure, which meaning is, resistance or support? As you can guys see right here, I had a level of resistance that, I was looking for the market to come down, break, but we are creating resistance. We haven't broke up out of this zone. So right now we are at a level of resistance. Now, are we at a key level of resistance? Well, you're probably like, well, Antoine, what do you mean key level? If I take my tool back, can I see resistance like as far back as I take my zone? Yeah, I can. I can see a high concentration of resistance within this market, guys. So what would that be? That would be like number 3. I'm gonna write this out, guys, on the description so everybody can be straight. But that would be like we do have a high level or high traffic of a resistance zone right here, guys. So okay, we're factoring in and we're pretending that this is the market session that we're looking at. And I'll probably use another example for a market session that's live, guys, or currently, open right now, right? So have we checked news, right? Is based off of my analysis, right? So have I checked news? Is there anything that can throw off the currency that I'm looking to trade right now? I would recommend checking that first, not being distracted by what news may say, but more so, maybe I don't want to jump in this currency pair because there might be some high volatility news coming up. You see what I'm saying, guys? So next, after news, you would look at the trend, guys. You would look at the overall trend. Then after that, you would look at what market session that you're in. So now that we've made that, we just go into our basic concept of technical analysis when it comes to trading. Am I at key levels or am I at levels of structure? Am I in no man's land? Like, And no man's land is, guys, when it's like this market is really not, at no levels or whatnot. So if it was like slightly below, like maybe like up here or somewhere up here, yes, I have structure, but I don't really have no levels, because you see how the market meets with this resistance. Yeah, we know it can come higher and meet that, but it meets with this overall resistance in the market. So that's a key level, and that's actually giving you positivity that, okay, either we're going to need to break this zone, or because we're at this resistance, we could have the market push down. Now that I've, pretty much formulated somewhat of a bias, what do I need to do now? Well, I need to pretty much find my entry. And the only way I'm going to find my entry is identifying what the market is doing based off of price action. And this is where people get tripped up. For example, I can show you guys all the way back that if we weren't even talking about like GU currently, right? So let's kind of talk about GU as the market opened on Sunday, right? So this was a Sunday candle right here, right? And this is like a perfect example where it's like people aren't patient enough and they just see what the market is doing and not wait for what the market is showing you, right? So most people, they look at the market and be like, for example, right now we're currently bullish, and people will be like, oh, we're bullish, not realizing there may be news, or if I didn't break it down to a smaller time frame, there could be an area where I'm not paying attention, like a pattern and stuff that could actually bring the market down, things like that. So for example, I'm going to show you, not in real time, but I'm going to play it back, right? So we were looking at GBP USD to sell. It did sell. We came up to this point right here, if you guys can see it. I'm gonna zoom in. Let me get rid of all this. I don't need all this stuff right here. So let's push it back to okay, so the market had pretty much made a move like this, right? It came down, well, it came up, opening, I mean, market open. I keep saying opening bell, but market open, this market came up, right? Then it created resistance, rejecting it, right? So the market actually popped up. It popped up to the Sunday candle, right? Now, I'll go into a Sunday candle later, guys. Just understand this was a zone that we could have potentially sold at. What did the market do? How did it respond? Well, let's go on a smaller time frame to see if it'll play out a little bit better so we can actually see the move. So by the time I saw the market, it was like this. It was like something like this. I mean, it had already shot down, but because of the time frame that I'm on, guys, right? So if I'm formulating a bias and I'm saying, okay, what I want for GBP USD to do is to sell, I can catch the impulse. There's two positions you can catch, an impulse and a retest. Most people, just to be safe, especially like Sunday going into Monday, you probably want to wait for clarification, but most people don't. They see this move happen here, right? They see this move. They say, I want to sell. Now, the sell was valid, right? But most people, they're waiting for so much confirmation is that they missed the move, right? And then they catch it after. And I'm gonna show you guys. Let me see if I can move forward. Oh man, I didn't mean to do that. Where are we at? I didn't mean to go forward like that. Okay, so the sell happened, right? Based off of the 4-hour time frame. Now I'm gonna go back a little bit more. So you're looking at the sell, right? You're confident in the sell, but you're playing scary because you want clarification, right? So you walk away from your phone. What do you think the market did? Market starts actually playing out. It starts playing out, right? So let's look. Boom. You see the sell, right? You see the sell, but because it was so impulsive, now you're over here thinking like, man, I missed the sell, so I got to get in the sell. You don't wait because you think that this is the move, right? You don't understand that, man, this was an impulse. So if the market is going to respect the sell, I have to wait for a retest, right? Most people don't do that. Hold on, guys. Most people don't do that, right? You decide to sell right here or right here. No break of structure to confirm besides this break, but you decide to sell right here, right? Now, I don't think that would have been a bad move overall. I mean, I go for the best move, but again, we're talking about percentages, right? From this entry, say we entered in this market, from this entry, that's already 26 pips. Now, again, we're basing it off of a 0.01, even though I know somebody's probably using $1,000. Doesn't matter. The percentage is still the same. 25 pips, right? You're okay with that instead of waiting to see how high the market can travel, right? This is where people get in trouble, is seeing this move and being like, oh man, bearish engulfing, this market is out of there. It may very well may be, guys, but you have Sunday into Monday, no strong volatility in the market. Well, too much volatility in the market, not enough volume. Data hasn't been priced into the market from the previous week or any other surprise data that we don't know about. So you enter in this market, you're confident, right? You're confident, but you have a 20 pip stop loss, right? So you say, oh man, I'm risking my 2%, right? My 2% is right here. So look what the market does. Take you out immediately. Y'all see that? Take you out immediately, because we don't factor in to the core. When the market starts moving, that's when everybody starts panicking and stuff. You start seeing it, and then you start losing like sense of what you even said that the market is going to do. If you turn this market into a line chart, what would have been the better entry? Let's kind of go back. So before we even see that it spiked up, what would have been the better entry based off? And I don't want you guys to answer that's in the group or what. I mean, you can type it, but don't come off of mute. But if you want to answer, guys, do it in the comment section, definitely. But guys, what would have been the better move? You need to wait for price. Even you've already said that I'm looking for a sell. So now the patient part comes in, guys. This is where the psychological part starts messing with people, because the market is moving live and people can't handle when the market is moving live and literally go against their own personal bias, right? So maybe you don't even see the move. Maybe you don't even see the sell, right? Let's give like another example, right? Maybe you don't even see the sell, but you see the market has dropped to structure. All right. Where's my play button? All right. See, the market has dropped to structure. You've already marked up this zone, right? And you see that, oh man, now because the market is moving live, you're getting antsy. You got the itchy fingers, and now you're confusing yourself. Well, now this is structure. This is a support zone I have. You know what I'm saying? What did the market previously do? Again, guys, price action. What the market is currently doing and where it's coming from, right? So the market broke out of this zone. If it returned to the zone, 9 times out of 10, it's going to do what? It's going to continue to sell, because this was a previous low that the market broke out of. I acknowledge this, guys, but this is where you got to go back out to the higher time frame. That's why it's important to start off with the overall trend, guys, the overall trend in the market, right? So the market, you're now panicking because you done broke it down to a smaller time frame, ignored everything that you already were waiting for in the market. And now, because the market's moving live, you jump in and say, man, I want to buy this market now. Well, this is what happens. The buy is valid, but the part that people don't do is just leave their trades. Oh, guys, do not go into open TPs, right? So say you did take the buy. That would have been a good buy. What are you looking for again? Percentages. We know that the gains are going to be infinite, but if we're trying to grow our account, we have to play the same way we played on the on us risking, right? So if we're risking like 3%, don't we need to try to at least gain a minimum of 3%? That'll put you at your 30 pips. So maybe you collect your 30 pips, right? But you say that, man, I think this thing is super bullish. And it could be, right? You start ignoring everything that you've already set up within the market, because again, guys, it puts pressure on people to see the market moving live, right? You have your setup. You didn't wait for your setup. You start getting antsy saying, I'm a buy here. Oh man, this is creating support. It's creating resistance all over. I don't know what's going on in the market, guys. The number one thing that messes traders up is that the need to continue. You know what I'm saying? The need to continue instead of just saying, you know what, I made, I made my percentage. I made my percentage. So let the market show me a little bit more data before I actually start jumping into it, right? Your buy was valid, you know what I'm saying? But you continuing to buy like up here and not waiting for the market to show itself. What was important about this move is that I drew this move up as the market, came down, right? And the reason why I'm showing you guys is because it's super simple. It is super simple that it's crazy. Break it down to a line chart again. What is this over here? Now, if you're new, you may not understand consolidation all the way, you know what I'm saying, yet. But for my experienced traders, what is this? This is consolidation, correct? What are we taught in the market? When the market breaks out of consolidation, it goes in that direction when it has a retest, because if it doesn't retest, it's probably going to violate that. Did it retest on the hour time frame? Absolutely. This was the move. Are we back at a level of resistance where the conditions can change? You know what I'm saying? Yes, because all we had to do was wait for the breakout in this direction, guys, right here. And it was a wick entry. Breakout in this direction, retest. Say your retest was about this area right here. Maybe, I don't know, maybe. Let's see if you still would have been risking your 30 pips or your 3%. Oh, you definitely would have got that. And you would have got more if you would have stayed in the trade, depending on what you were aiming for. But again, 3%, 3%, 3%. Here's the thing. Here's the math that I can show you guys that I know works, right? If we just do 3%. $1,000 account, right? $3%, $30, right? I just did this math for one of the guys yesterday, right? So now this is kind of extra. This is not really psychology. I guess it still would be considered psychology, because it's like people have to train their mind into like grabbing the money, right? So most of us work, a conventional job still, right? We don't have the luxury of having all the free time in the world to be a trader. we don't have all the luxury in the world to have the free time to be, like a multi-level trader or whatnot. So we have a job. So if we know that we're restricted based off of time, but we know that I can make $30 in the market, I can make 3% of my investment, right? Now, how many times? That's up to you. Now, if we base it off of like again, like I said, a part-time job, nobody's getting paid that I know on a part-time salary $30. Now they may be, I don't know, they may be, but let's do this math, right? If I was a part-time employee making $30, I work anywhere from 4 to 6 hours, correct? 4 to 6 hours, right? Well, what if I took that same knowledge and applied it in my trading account? 4 to 6 times a day, 4 to 5 days a week. Still using my 3% risk. And obviously if it's 3%, I'm moving at like a 0.0. I'm moving at a 0.1. So I'm moving at $1 per pip, right? Well, that 4 to 6 times, and I always go for the most. I always go for the highest, obviously, right? So what's 30 times 6? 30 times 6, basic math, is $180, right? $180, right? $180. Now, we take that same 180 that we know we can make because we're on a part-time salary, if you understand me, guys, right? We're on a part-time salary. We take that 180 and we do it 4 to 6 times a week. I meant to say a week. I mean, not 4 to 6 times a day. I'm saying it right, guys. 4 to 6 times a day. My bad. 4 to 6 times a day. Well, what's that math? Obviously, let's do the highest. I actually don't know that math. What's six? Blah blah blah. 4 6. Oh, did I just do that right? Yeah. So $180 4 to 6 times a day. Most traders know they can at least make a minimum of $100. You know what I'm saying? Like a minimum of $100, a minimum of $30, right? So even if you don't get your 180 all in one day, if you put yourself close to it, you're still better than everybody else, right? So say you do $100 a day, but let's just stay at the 180, right? 180 times six, because we're going for the most. 180 times six is what? Based off of what I'm showing you guys here, does that look difficult? Now, I'm not saying that it's not difficult in the market, but using this very logic, is that pretty simple in the market to be like, okay, if I treat this like a part-time job, knowing that I'm only going to risk a 3%. So if I hit 3%, that means I either have to be done for that market session or I have to be done for that day based off of the lot size. Now, it is going to be based off of the lot size you use based off of your account size, if that makes sense, guys. So again, 100 pips, 3% on a 0.0, I mean on a 0.1, $1 per pip would be $30, yo. That's okay to lose. I'm risking $30 to potentially make 180, guys. And I don't look for that 180. I don't look for that 180. I get as close as I can and I take that money. So the thing is that when I see close to $30 or $30, I take that. Then I try to reassess the market again. I take that again. Before you know it, you've probably went to only 2 sessions throughout the day, 5 days a week, potentially knowing that we're going to lose and stuff. And you made $1,000. Now, in a perfect world, you could have had this, guy. I mean, you can have this, but we know we have to factor in losses. So let's say what the week might really be. The week might be this by the end of the week. That's still good money if I still have money coming in, guys. You know what I'm saying? But the biggest thing that you have to do when you're using this thought process is that I have to grab the money. But what's going to keep me grabbing the money? My percentage base, what I'm willing to risk and what I'm willing to gain. Again, your gains will always be infinite. There's no number to your gains, but if you're following your percentage, you'll always hit your mark. So it's like when I go backwards, I'll never put myself in jeopardy because I'll never put myself in jeopardy because I'm using proper risk management. So like a sidebar, guys, what I will recommend is like on simple stuff like not trading without a stop loss. That's insane. I don't care how good of a trader you are. That's insane. I've done stuff like that. That's insane for me. You know what I'm saying? To not trade. I'm not saying that you have to enter a stop loss right then and there, but if you enter the trade to catch it, you better be modifying that stop loss, guys. Was there something else that I was gonna go over with you guys? I think that basically covers it, guys, as far as like my psychology and like how I approach the market, things that I'm looking for. Obviously, this is kind of it's very vague right now. We're gonna go deeper into it as the year gets on, but for my people that's on, I hope that helps somebody, guys. Again, guys, if you find value within this YouTube channel, please drop a like and please subscribe if you find value, guys. So appreciate you guys. We only do 30 minutes. I'm gonna continue with my group or whatnot. So I'll see you guys at the top because we're taking everybody to the top with us. Thank you.